Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, June 26th, 2009. Well, we're seeing a slightly lower market today, very minor to the downside. The S&P down about 3 1/3 points, the Dow down 48, and the Nasdaq is actually bucking the trend up about 2.5 points here on the day. And what you've basically seen is a very range-bound market where we've seen a major run-up yesterday, and now we're kind of consolidating that move. And that's exactly what you're seeing today, a monstrous move yesterday. After a major move like that, we always talk about how you consolidate. Generally, whether it's a down day or an up day in the big way, the day before, you're going to have generally a flat market, maybe slightly to the opposite side of the day before, as a few profit takers come out, and that's exactly what we're getting. In addition, today's Friday. Fridays over the last month or so have been notoriously extremely light volume, and that's partly due to the summer aspect of the markets now. Remember, we're into summer, we're in late June, we're coming into July 4th weekend. Things are going to be very quiet, and the volume on the light side also means that generally the market will be very range-bound, maybe slightly neutral to even possibly higher. As you can see, the Nasdaq ticking up a little. Yesterday we had that monstrous run on the Dow, Nasdaq, and S&P, 2% gains across the board. Now, what you're seeing today, folks, on the charts, and I want to start talking on a technical basis now, is really a range-bound market between two master levels. The master level of 91.40, alright, and the master level of 92.10. Alright, and again, what you can see here, folks, very clearly is the 91.40 is holding up extremely well. They're not letting this market break through that 91.40 level, and you can see we tested it on the first candle right here. Then we rallied up and went to the highs near that 92 level. We've actually broke through 92 just underneath that 92.10 level, which was the highs from yesterday, double, triple top. Then we came back down, retested the next three candles, bounced again, retested for about 2, 4, 6, 8, 9 candles, and then bounced off of it again and came back in, and now we have hovering kind of in the middle area of the markets. And that's precisely my point today. While it's very light volume, you can see a definite support line right here holding up in the markets at 91.40 on the SPY. This is a major level to watch. If later this afternoon, by some chance, we were to take this level out and close below and confirm it, you'd actually be looking for a handle of 91 on the SPY to be hit, which from current levels would be about a 65-cent drop on the SPY. Now again, we'd have to close below this green trend line for that to be in play, and to be honest, guys, I don't necessarily think we're going to break out of this channel today. I could see this market being very much range-bound for the rest of the day. Now, I just want to comment on a call from yesterday. Many of you guys watched the video yesterday as we broke up. I was doing the video live as we broke up here, and I said, guys, watch this 92 level. I don't think this market goes any higher than this. I think this is the top. Sure enough, yesterday's call was dead on in this intraday video. So while I usually showcase these videos to show you exactly what we do, except in less depth, obviously, in the nightly videos, how we go into the more of the day trading, swing trading, long-term investing aspects in the nightly videos, you can see how the accuracy is definitely there. The key levels show up, the key calls show up. That's all stuff you're getting in the nightly videos, along with the daily market report, pro trader watch list, the new hot charts and alerts we just added, which, by the way, I just added 2 new charts today. My partners and I, we added 2 new charts, which are based on longer-term investors for them and watching things from more of a swing trading perspective off charts and organizing the charts and showing you, basically denoting on the charts what's the key levels to watch. And that's 2 more up today. We probably put up about 8 this week or so, 6 to 8 this week. Fantastic stuff so far. I think it's by far one of our best new research center services included, and it's all included in that research center. So if you want to join, we highly encourage it. Educationally and guidance-wise, it's second to none out there. Alright, so again, guys, just noting this market, volume very light here. You can see we've kind of started to trend up in a little bit of a pattern here, and you could actually take the lows here, and you can see you almost have a little bit of a channel developing right over here. Alright, in fact, let me do this upper line a little more accurately. There you go. And you can see you kind of started a little bit of a channel here. You're hugging the 20 moving average, the 50 moving average on the way up. The 20 is right below here, and you're just kind of hovering here, and there's a little bit of a channel now starting. And what you want to look for is if we break this little bit of a downside yellow line, which can be looked at as the 20 moving average sloping here as well, we should come down to this retest this 91.40 level or so, and possibly break down. But again, I'm not thinking that's going to happen. I just don't see it today. The volume is too light. It's Friday. The markets are rarely down on Friday. So I just don't expect it. Now, this big thing I want to talk to you guys about today is the USO. You may ask yourself, well, why is the market slightly lower today? The answer would be the USO. As you can see here, the USO gapped slightly to the downside and really sold all the way down to the 200, bounced, bearish flag pattern. Notice the bear flag here. Great bear flag pattern right here. Again, this is something we cover in the research and guidance portions of the Race Research Center and in the webinar and in the chat room. Beautiful bearish flag pattern. Retest right there. That's what it tells you. And you're actually trading sideways again. Possibility of another bearish pattern developing here as long as you stay below this 20 moving average right now. And again, that could tell us that we're going to retest the 200 again to the downside into the 230 spot crude close. But my point is this. The market's been an interesting character today because of one thing. Goldman Sachs, every time the oil drops, Goldman Sachs seems to get a bid. All right, and I mean that precisely, guys. As soon as you see the oil front drop, spot crude drop, the USO drop, you are seeing initially, immediately, the Goldman Sachs get a bid. And it's very suspicious because it almost looks like they know oil's falling and they're propping up Goldman Sachs to keep the market from really dumping out and keeping it in this tight range. And I want to show you that. All right, look at this run early in the day. All right, first real hour of the day, massive run, and then you go into pause mode. All right, so let's take a look at that Goldman Sachs chart right here with a nice push up to the highs of the day. By the way, broke a triple top here, which we had noted on the Research Center and on the charts yesterday on the Rant and Rave blog. Look at this support, the resistance level right here to here to here. All right, now what you do is you connect it through and check this out. Just draw it right through. Look at the breakout. Again, something we noted on the Goldman Sachs chart, breaking out right away. But in any case, note the big up move in Goldman and then sideways consolidation. Now look at the USO. USO big drop for the first hour and sideways consolidation. So notice how they're going opposite of each other. Then all of a sudden, the USO starts to drop hard again. What happens to Goldman Sachs? Goldman gets a massive bid up. All right? Big pop on Goldman. Now what's happened? You've kind of had Goldman come in a little bit, consolidate right here. What's happening with the USO? It's consolidating right here again. So you can see how this is fascinating because if it is some sort of weird manipulation going on, I mean this is genius because you're basically taking oil, which is a big control of the markets, and Goldman Sachs, which is the other big controller, and you're working them against each other. So this is basically if I was a trader or the top trader or the Fed or whoever it may be, if I was out there and I said, well, I want to make sure this market doesn't drop off the map today after a big rally yesterday, and you know oil is going to be weak, what you're going to do is buy Goldman Sachs and push it up when oil drops. So whenever oil drops, you make sure Goldman goes in the opposite direction. Basically what that does is ensure that the markets don't go anywhere because they cancel each other out. ExxonMobil and Goldman are basically the two leaders in the market. They go right off of oil. The charts will be virtually identical usually, except today when they're the exact opposite. So again, really interesting to note how the pattern is exactly, precisely to the second almost, when you see oil dump or Exxon come in, you're seeing Goldman rise and rally hard. And that's a very suspicious thing, and I find that extremely fascinating. I love this kind of stuff, guys. It really makes you think, makes you almost think outside of the box, and makes you really reanalyze the whole market as a whole. In any case, I found that fascinating. Let's quickly go back to the spiders here on the intraday. You can still see this little bit of a channel. Looks like it's still continuing to work. Your right came to the lower end of that. Now you're getting a little bit of a tick up, and that continues to work. Now again, folks, just to get more insight into the markets, more education, more guidance, more picks and everything, join the Research Center. Fantastic stuff in there. Also join the chat room or the webinar, whatever you will like. We're here to help, we're here to guide, and we're here to educate. That's our bottom line, avoiding the Wall Street hype and telling it how it is. Take care, folks.